Hello there, this is James and you're watching Tixee Live. In today's episode, I want to sort of ask a question in relation to safe havens, especially in the current economic climate. So I want to have a little chat about that. Plus a couple of things, what's a couple of speeches going on today, and we'll have a look at that, and we'll look at how that's impacted the market. And of course, it's Friday, so I'll do my usual wrap up of the trading week. And what a week. What a week it's been. But anyway, before I get into that, remember these little episodes are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get cracking. Now, first of all, I want to start off with something which is happening right now, okay? And that is Fed Chair Jerome Powell is currently speaking right now. I've got my little trusty phone on me, so I can keep tabs in case he says anything in particular which may rock the market. So I'll let you know if it happens. But he has said something already. He's actually said they're acutely focused on returning inflation to 2% goal, to their 2% goal. So again, he is the inflation terminator. He's obsessed with inflation. Okay, so they said the Fed is acutely focused on returning inflation to 2% goal. Remember that, because I'll come back to that point a little bit later when we discuss something else. But acutely focused, transfixed with inflation. So yeah, if he says anything else and it impacts the market, I will certainly let you know as I'm live on air. Now, as we know, we live in a current climate of economic concern, especially with sort of actions done by the three central banks in particular this week, the Fed, the S&P, and the Bank of England. So when we have times of concern or times of insecurity, as you might remember, I often say that what happens when you have this, you have a risk-off type attitude. So then what the market does, it moves its money out of riskier assets into safe havens. So I want to ask the question, are we seeing the battle of the havens at the moment? Now, the safe havens, okay, the safe havens include the US dollar, gold, which is, you know, I've often talked about gold and how it's not really activated as safe haven status, the Japanese yen, and the Swiss franc. Those are the ones which are the main safe havens, okay? So who is currently winning at the moment? Let's have a quick look at this, actually. Let's have a quick look at it on my charts, and we'll compare the four and how they're all performing at the moment. Gold, okay, gold has broken that level we were looking at a little while ago of 1,828. However, it's still really capped under that other level we've been watching, which is 1,864 and 20 cents. So though there is some bulls trying to push gold further, they really are capped at the moment, and it's currently trading at $1,848.97. So currently we would say the dollar is currently winning on this. Though gold is above the 50, the 200 and 100-day moving average, and the RSI is in between the 70 and the 30, so not indicating overbought or oversold at all. So let's have a quick look at something else. Let's look at another safe haven. Okay, other safe haven is obviously the dollar yen, which we've spoken about a fair few times on this, okay? Currently trading at 134.47. Not helped, the yen's not helped itself by the BOJ has not helped the Japanese yen by not doing it, taking any action. but it is still slightly capped again, that behind, just below that psychological level, which is 135. That 135 is the psychological level. Okay, so it's still capped there, but currently trading 134.47. That's mainly down, in my opinion, actually to BOJ's action. Okay, but yeah, so at the moment you say, okay, yeah, well, dollar is winning on that one. However, something is not winning against, and that was caused today, and this is the one I think is currently winning, is the Swiss franc, US dollar Swiss franc, mainly down to the action what the S&B did a couple of days ago. As you can see this massive candle here, it came under a huge amount of pressure, okay, on that day, and the pressure has continued. It's currently trading around 0.9636, okay, under the 100, under the 50-day and under the 200-day moving average, and we're not below the 30 on the moving on the RSI either. So it's not showing signs of being oversold currently at the moment. So the Swiss franc, and there's nothing else the Swiss franc is absolutely winning at the moment, and that is the Swiss franc Japanese yen. Swiss franc Japanese yen. Basically, in a nutshell, the Swiss franc Japanese yen is at a 40-year high, trading around a 40-year high. So really currently, as it stands, we're looking at more Swiss franc is currently winning the battle of the havens. We'll have to see, obviously, how the dollar performs, because really the dollar is going to be the main one to look at in the coming days. But currently, as it stands, the Swiss franc is winning. Okay, so let's have a look and chat about other things. What has also happened today. Remember, this morning I discussed that there was going to be a couple of BOE individuals, MPC committee members speaking. Well, we did have one of the guys come out, and like I said, I was a bit nervous about what he was saying because he wasn't part of the hawks who went for 50 basic points yesterday, the Haskell, Mann and Sanders, who voted for 50 basic points. So he is slightly dovish, and he has, in my opinion, I think it's not the only reason. I think we're seeing a bit of dollar strength as well, and we'll look at the sterling in a minute, but he does seem to be set a pretty dovish tone for it. What he actually said was, if we act too aggressively, we could cause undesirable slowdown. This is Phil. Hugh Pill, his name is Huw Pill. He has, yeah. So if we act too aggressively, we could cause an undesirable slowdown. Okay, that's dovish. Secondly, what else he said, and this really amazes me, actually, this comment, because these guys are supposed to know what they're doing and give us confidence. It's up to the markets to decide if we consider a 50 basic point rate hike. Brilliant. So we should turn to the markets to set interest rates as well. Obviously, the market action dictates decisions, but when him saying that does sort of give me the impression that, doesn't really fill me with confidence that the Bank of England or any central bank at the moment clearly know what they're doing. So yeah, anyway, so let's have a quick look at the cable and the sterling actually in general on the back of these comments, because don't forget the sterling was sort of was having a bit more bullish momentum. Actually was trading above 123 on the back of that sort of hawkish tone yesterday, not the 0.25 basic point hike, but the hawkish tone which was coming out. But actually, after those comments, and again, because we're seeing dollar strength a little bit, dollar strength returning, it's currently trading at 122.43, under the 50-day moving average, just above the 200 and under the 100. So yeah, it's feeling the pinch again. I would be certainly keeping a close eye around here and around the level I hear of 121.97. So yeah, it is running out of steam a little bit, not thanks to Hugh. So thank you for that, Hugh. Right, other stuff. Yeah, as we mentioned, because of some of the actions of the central bank, the markets are sort of living in fear a little bit. This is why we wanted to look at the safe havens and things of this nature. Okay. Sorry, my throat's getting a little dry. Because the reason why the markets are scared is because there's been so much hawkish tone, okay, and by a number of the central banks. So like I said, we have 3 central banks this week, all increase interest rates. One surprised us massively. And there seems to be an opinion now where the markets are feeling that the central banks are so obsessed with getting inflation down, so obsessed with it that they could jeopardize the economy, and they were happy to put us into a recession because they are so transfixed on getting inflation down. In fact, yesterday was not a good day for the markets in general, where the Dow Jones tumbled below 30,000 level for the first time since January 2021. So let's have a quick look actually how a number of the indices are doing at the moment. Okay, we are seeing a little bit of a bounce, but not a dramatic bounce off the lows. I mean, currently, even now, look again. This is the Dow. It's under the 30,000 level again. It's now currently trading at 29,936 points. So that's not looking terribly good. NASDAQ, okay, don't forget we spoke a lot about the NASDAQ, how much it's declined since the beginning of the year. Again, under pressure at 11,143 points. And the S&P 500, okay, 3,672 points. So yes, there is signs still that the market is very much living in fear of what the Fed and what these central banks may do next with their obsession with inflation. Just checking to see if there's any more comments from Powell at all. Nothing at the moment. Okay, but yeah, so that's where we are standing at this current moment in time. So anyway, as usual, it is a Friday, and on Fridays I like to cap it off with a little walk down memory lane. Anyway, you know what I mean. Look back on the trading week, and what a trading week we have had. And I don't know about you, and I say this every week because it's true. I'm excited, but I'm also at the same time absolutely exhausted because what a week we've had. Let's start it off, okay? Let's start it off with Monday. We start receiving negative economic data from the UK. GDP was negative, minus 0.3%. Okay, then Tuesday, the data continued. Claimant counts, minus 19,000 versus what the expectation of minus 49,000. So well off the mark. Then, of course, unemployment rose to 3.8%, okay, in the UK. So very, very poor data. Then we started obviously having the build up to the Fed, which then the bears, the market became incredibly bearish. Then come Wednesday, the big day, obviously the build up for the interest rate decision by the Fed. But what happens? That still happens, but something else jumps in the way of that first. And that is the ECB calls an emergency meeting. Emergency meeting. They don't do that. They call it an emergency meeting. So then all of a sudden the market, well, certainly the Euro bulls got a little bit excited that they might be doing something. They might actually take action now. But the meeting turned out to be a lukewarm response. Gave a lukewarm reaction because it's sort of was a bit like having a meeting to arrange another meeting about having a meeting about doing something. So yeah, that disappointed. However, to the ECB's credit, by saying a few things from this meeting, not confirming anything or not giving us firm direction, they have still managed to get the spread between the two yields of German bonds and Italian bonds slightly lower, which was worrying the market. So they managed to achieve a little something. And then what happened? Of course, we had the Fed interest rate decision, didn't we? And there was a big build up for that. We were expecting initially 50 basic points, and then rumor went around, but it was going to be 75. And before we knew it, the whole market believed it was going to be 75. And guess what? They raised it to 75, which is the highest amount they've raised rates since 1994. So there you go. The market wasn't surprised by that. And then we saw a little bit of dollar sell off on that. Buy the rumor, sell the fact. But then reality hit in the next day that what this meant, okay, that the Fed would possibly be even more aggressive. So then doubt came into the market's mind again. Okay, because initially on that announcement of 1.75, they thought, okay, this is not too bad. We can handle this. But then they start realizing, actually, this is not going to be the end of it. So yeah, the market then got bearish again on the Thursday. Then Thursday was the big build up to the Bank of England interest rate decision, another bank to do it. However, somebody got in front of them and somebody really outshined them. And that was the SNB, the Swiss National Bank, who surprised everybody out the blue, suddenly rose interest rates by 50 basic points to take their interest rate to minus 25. Okay, so that was absolutely shocked the market, and we saw the Swiss franc absolutely skyrocketing. This is why, like I say, the Swiss franc is currently winning the battle of the havens. Anyway, the Bank of England then stepped up slightly, outshined by the S&P. Oh, by the way, when the S&P did that, that's the first time they've actually increased interest rates, first moved interest rates in 15 years. So that was quite a dramatic thing. Anyway, then UK's turn. So they stepped up. There was a little bit of expectation or hope there might be 50 basic points, but in general, everybody knew they were going to be 25 basic points, and they did indeed. They raised interest rates by 0.25 to 1.25. So yeah, they did that again. Didn't surprise the market initially, disappointed the market, but then the market started hearing a bullish tone afterwards with some statements made by them afterwards. And obviously today, we've had the Bank of Japan, who is not joining the rate hike club anytime soon, is happy to stay where it is, happy to keep things as it is, and even said he's willing to loosen monetary policy further. So it's a completely separate from all the other central banks, which continues obviously to weaken the yen. So what an exhausting week we have had. It's been a great week, a really exciting week, a bit messy, but it has been a great week, and I thank every single one of you who's joined me and come along for the ride on this this trading week. It's been something else. But don't forget, okay, we've got another week to come. We've got next week still to come. So these are all the things we have happening next week. Canadian retail sales, Bank of Japan minutes. That will be interesting. I want to see what they say in their minutes. Big one. British pound, UK CPI. Expectation of that is 9.8%. Don't forget, it currently is at 9%. They're just waiting, and they keep telling us inflation in the UK is going to go to 10, 11%, double digits at some point. So 9.8 is the expectation on that. So that's going to be huge. Canadian CPI, okay? Fed Powell testifies in front of the Senate. German manufacturing PMI, UK services PMI, and US initial claims. So all big events. As the market currently stands, the FTSE is currently trading 1.73% higher. DAX is slightly up by 1.02%. Eurostock 50 is currently trading 1.29% higher. So like I said, there's a little bit of a bounce on the markets at the moment, but still the overall sentiment and tone is still very fearful. So don't forget, when I'm online, you can always ask me questions whenever you want, or just say hello if you want to. This is what I'm here for. But like I say, it's been a real exciting week. Thank you, every single one of you who's joined me on this week, and I hope you can join me again next week, so we can see what happens. I don't know what I'm going to be doing the watch along with yet. I haven't decided that, but I will let you know what event I'm going to watch live. And so I'll share that with you. So please feel free to come along and join me for that as well. If there's no questions, okay, don't be shy. Give it a try. You can always ask me something. Like I said, just say hello if you like. It's never a problem. If there's no questions, then in that case, what I'll say is, if you're watching me on Facebook, okay, and you like it, give us a follow. If you're watching me on YouTube and you like it, by all means, subscribe. Hit the notification button so you know next time I'm going live. If you found this program interesting, insightful, and helpful, and you've liked it, give me one of these. It's Friday. It'd be nice to know, you liked it. And on that note, remember, I'll be back online next week, Monday. Nearly forgot. 8 a.m. UTC, and of course 1 p.m. UTC. So I hope to see you then. But anyway, till then, remember, these little programs are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.